NASDAQ hitting another record high today, as we said. S&P 500 not that far behind either. Renaissance Macro's Jeff deGraaf says, well, I'm not going to tell you what he says. We're going to ask him what he says on where expectations are right now, because I don't want to give it all away before I hear from you directly. Are we primed to go higher, or are we too complacent, or what's the story?
I definitely don't think we're too complacent. Most of the indications that we look actually show that there's still room. There's a gap between kind of people missing out in that second quarter rally and where they are today and what they want to do. There's a lot of people waiting for a pullback, and usually when there's a lot of people waiting for a pullback, you're just not going to really satisfy that. So, one of our favorite things to do is look at what expectations are from the consumer standpoint, and as counterintuitive as it may be, low consumer expectations actually result in higher equity prices historically. So we love the idea that this is just coming off of, what's essentially a 2 to 3 standard deviation downside move, and it just hasn't caught up yet. So I don't think there's too much complacency. I certainly don't think there's too much speculation or over exuberance. And I think we're actually still in a pretty good spot for the remainder of the summer.
What are the charts? I mean, you look at the charts, obviously, as the head of technical research. Let's take Nvidia, for example. Right. Even when you wear a cowboy hat. Nvidia, okay? $4 trillion in market cap. Does the chart still look good? Is there a correlation between how you feel about the overall market and how you might feel and how the chart might look around a name like Nvidia, which is now the biggest in the market?
Yeah, look, I mean, that's just happens to be coincidental today. But, let's look back over the last year for Nvidia, right? And really this time last year, we were warning clients about the excess enthusiasm that we had seen. We took a lot of heat for it. And just said, look, that just has to take a beat. You're going to find that there'll be excuses, something will happen, and it'll probably get oversold, and the oversold condition's probably viable. But, we want to be very careful of that. And now here we are 12 months later, a lot of that excess enthusiasm has dissipated. It's starting to come back for sure. But I think more broadly, what we saw this time last year, where every semiconductor was doing well, or practically every semiconductor was doing well, now it's a lot more selective. You've got Broadcom, you've got Nvidia, you've got Credo, you've got KLAC, you've got, a handful of names, and several are being left in the dust. And I think that's the differentiation here. So I look at Nvidia as not necessarily a proxy or a bellwether for the market, but certainly it's helpful. And we're seeing it across the board. I mean, a lot of people complain about breadth. We just don't have those same problems with breadth here. I think it's people making excuses, frankly. And from what we see, it certainly seems fine. It's in gear, and it looks like this market wants to trade higher.
Well, you don't care about the concentration. I mean, you'd admit it has been a large cap stock rally. I mean, the S&P's dramatically underperforming the equal weight for a reason, as I mentioned at the top. The biggest names in finance, the biggest names in tech, the biggest names in industrials.
But they're all going in the same direction, right? You're always going to have relative outperformance and underperformance. What I'm most interested in, if I've got the mega cap or the cap weight index making a new high while the equal weight is trending downward, that's a problem. We're not seeing that at all. So you're going to have that concentration effect just from the mega cap names. I don't worry about that. There's probably the last 3 or 5 years we've had plenty of clarion calls around that just didn't come true. So I'm always skeptical on that and more careful. I would say at the same time, Nvidia's making a new high. The Apple chart's not that great. The Google chart's kind of floundering a little bit. So there's a trade-off that takes place here, and we're certainly seeing that.
This power play that's been really at the forefront in terms of AI is on your radar, too, based on a chart looking like it might be breaking out again. It's Vistra. I mean, a couple of years ago, it was the best performing name in the S&P, if I recall. Yeah. Why again now?
Well, we were looking for charts that look similar to Nvidia. I know you want to talk about that. And so, they're not all semiconductors. Obviously, CLAC looks great and Avago looks great. But, here you've got a different name or a different industry group, and Vistra looks good. It's, again, a long consolidation, starting to come back around. A lot of that speculative enthusiasm was burned off. You could see it in the options market. People just kind of fell let's call it dormancy, if you will, around the name, and now it's making a new high. And I think that's really important here, Scott, that, and we've talked about it before, but right now is the point where you want to be chasing relative strength leaders. You don't want to be chasing laggards, because it's going to be a much more challenging environment. What you want today are the leadership names, because they represent the narratives of tomorrow. And I think that's exactly what you have with both these names that you're talking about.
Yeah, why make it more difficult on yourself, in other words? Jeff, we'll see you soon. That's Jeff deGraaf.
Thank you. Good to see you.